Welcome to Analysis in Chains with Nathan and Neal. Happy Monday. This Monday, October 23rd, 2017, Neal and I are glad to talk to you. Hi, Neal. How's everything?
Hey Nathan, are you on drugs? You sound so calm. You sound like someone who just realized they have 1,000 bitcoins in their wallet.
If only. No, everything is fine. Nothing is ruined. I'll tell you what it is. I had a nice, relaxing weekend. It was a beautiful weekend here in Berlin. A little rainy on Saturday, but on Sunday, went out to a forest near here. Got some nature in me. Didn't think about the upcoming Bitcoin hard fork. Everything was fine, and now I'm relaxed and ready to take on the week. How about you?
I was good. I had an interesting weekend. My cousin was over. She was here for a conference, and she told us an interesting story. She said, because I told her I was doing a podcast on crypto, and she said, "Oh yeah, do you know anything about Bitcoin?" And I was like, "Yeah, of course." And she said, "Yeah, back in 2011, a friend owed us some money, and he decided to offer it to us in Bitcoin, and we thought, hey, why not?" And I was like, I just like stared at her, and I was like, "What?
2011.
How many Bitcoins do you have?" And she was like, yeah, we have like 30 Bitcoins. And I was like, what? And I was like, what? And I think they maybe only cost like €100 back then or something. And now she's worth like $180,000. And I was like, what? And I was like, okay, so did you forget about this or what happened? So yeah, we just totally forgot that we had this, and it just came up last week. And we just realized that we had all this money. And I was like, wow. And I said, okay, but what are you going to do? Are you going to cash out now? Are you going to like get it all out? And she was like, oh, maybe we'll just leave it and let it, go. And let's, probably retire in a few years as millionaires. And but
what?
did that really...
That's nuts.
It's crazy, but that really got me thinking. Yeah?
Sorry, go ahead. I was just going to say, that's not the first story of this I've heard.
Yeah, I know. I've heard this multiple times. Like similar stories. People forget to have Bitcoin, and next thing you know, they're a millionaire out of the blue. And so I was doing some research. I was like, "Hey, this is crazy," and reading more about Bitcoin, the hard forks. And one guy I like is Tom Lee. He's the guy. If you ever Google Bitcoin to 25K, he's the one that says it's going to be 25K in 5 years. So I always thought Tom Lee was crazy, but he's very, very good analyst. Like when you hear him talk, his analysis is very, very rational, and I'm starting to believe him more and more. But Tom Lee, yeah, he's usually on CNBC. We'll put some links to him on the podcast so people can follow it. So Tom Lee was saying about Bitcoin that you have to treat it like a social network in terms of its growth. A friend tells a friend, and then another friend, and then it grows and grows exponentially. And he was saying that because there are so many hodlers, like people who hold, or people who have Bitcoin from the very, very, very early days, when it was very, very cheap, people have kind of forgotten about it, or they're kind of holding it long term. And that means there's not much actually in circulation. And because there's not a lot in circulation, that is why it's so expensive. So if we think about a lot of the recent altcoins that are out there, they're only maybe like a year and a half old. At most, so many of them now are probably only 3 months old. So there's not many people holding them. So that means there's a lot in circulation, which means that's why they're so volatile. Whereas, yeah, Bitcoin is still volatile, but it's still growing at a rapid rate because there's so many people just buying and holding. And I thought it was a very interesting analysis, and that's why he was really summing up the reasons why he thinks it'll go to 25K. So it's so interesting, coming across someone that actually is in that bracket of having Bitcoin for so long, but also ties into Tom Lee's analysis of why he thinks it'll go to 25K in 5 years.
It's interesting to me just because this is sort of the other aspect of our own knowledge that fills in some of the details. Like we had talked a number of weeks, months, how long has it been? A few episodes back about whether or not this was a bubble, if it's going to go up, if it's going to go down, and what factors contribute to that. Is it just speculation? And I remember at one point we were talking about how it's not quite like a bubble in a housing market where people are purely speculating. You also have this speculation that's driven by more and more people coming into the market, and we were talking about that, but we didn't get the other side of it, which was this culture, this hodling culture, this culture of holding on to your bitcoins, or the other side of it, which is just investing them in altcoins, which is also takes them out of circulation. Whenever any of these altcoins does a token sale, they're going to be selling in exchange for Bitcoin and Ether, and so that locks up all of these tokens that then therefore can't be traded. And so the more illiquid the market, the more sensitive it's going to be to these price fluctuations.
Exactly. Well, what I also find very interesting in relation to Bitcoin is that we've seen the price really rise up very rapidly recently, and we kind of assume a lot of it is related to the fact that we have these hard forks coming along and people want to cash in. What I find interesting is when I go to coinmarketcap.com, and if you go to like the tools and global trends, when you look at the percentage breakdown of the market valuation, like who contributes the most to it, and you see that Bitcoin was declining as a percentage over time, obviously with more and more altcoins that were coming onto the market, which is natural. But then it kind of plummets as a percentage when this whole ICO boom started happening, because everyone was like, I guess, taking their Bitcoin and converting it, as you were saying, into other altcoins because they were like going up in high valuations. But now we've seen a trend reversal now where it's almost like it's correcting itself. It's like it was too rapid that people were exchanging Bitcoin into altcoins, and now there's a reversal happening where people are converting altcoins back into Bitcoin. And I think that could be the other side of Bitcoin as well, is that people are like, okay, maybe we got too excited about altcoins, now let's go back to Bitcoin because it's on a steady direction. And so again, this could also contribute to its rapid growth. When we look at the whole ecosystem, all altcoins and all cryptocurrencies, it actually hasn't gone past its peak. I think when Bitcoin first went to 5,000, which was at the start of September, hasn't gone back to that number yet. So we could see the start of a decline in altcoins, but also Bitcoin becoming more and more stronger now in the coming weeks. Now, whether that's down to just because the forks are coming up and people want to cash in, we don't know. But if Bitcoin continues to climb after the forks, after SegWit 2x, this could be bad for altcoins because people could be giving up on them, and Bitcoin could really just be eating up the whole crypto sphere and becoming the main cryptocurrency over the next year. So it's going to be very interesting.
I was reading another theory on this, and maybe we should get our tinfoil hats for it. Well, I suppose we'll see what happens in the next couple of days with the Bitcoin Gold fork, if it happens.
Yeah, if
it happens. But what this person was saying was that I don't know if Bitcoin Gold is a scam or if it's legit or what. But I do know that if I wanted to manipulate the Bitcoin market, what I could do is announce that I was going to do this amazing fork, drive up the price as everyone thinks there's going to be free money, and then have some sort of sell off all my Bitcoin and then have some sort of reason that it's not going to work, and then buy up the Bitcoin after the price drops.
That is very good. That's very good.
I don't know if that's what's happening, but if I wanted to manipulate the currency market, that could be a way I could do it.
And if you want to manipulate it, you do one before another one, because then it's like two. You end up having two forks. So with SegWit 2x, people could be nervous because I don't know what's going to happen. A lot of these miners could go with SegWit 2x, then what happens? But people kind of don't think about that, and they think there's two forks coming, which means lots of money. And so, yeah, I think that's a very good point. One thing I find interesting about the Cardano blockchain is that it cannot be forked it has a layered
Cardano
approach.
was the one that Aggelos was working on that you interviewed a couple of weeks ago, right?
Exactly. So Cardano is the one that Aggelos Kayas. I should probably reframe. So Aggelos Kayas is the chief scientist of IOHK, which helped develop the Cardano blockchain. And a lot of the people involved in Cardano originally worked with Ethereum back in the day. And as you know, the whole Ethereum situation where when it was about to be released, they found this issue with it and ended up splitting into Ethereum and Ethereum Classic. And so to avoid any hard fork issues in the future, Cardano, and I guess the Ethereum guys learning from the experience, don't want to have any forking like a lot of the blockchains do. So they've built it into their system where it's unforkable, because however the upgrades are done. So this could be, as you're saying, this could be the issues of future blockchains and cryptos in the future, is that if you're forkable, you could be manipulated. And therefore, I'm curious, could we see people develop systems to reduce that? Like, could Cardano become more prominent in the future because it's unforkable? Or, does it really matter? Maybe the forkable ones are more popular because people think they can get free cash in the future. So, yeah, we'll see how this space evolves.
It's anyone's guess, but I think that if people are motivated to manipulate the market, they will find a way until it's regulated against them. Because people even manipulate traditional markets. It's not as easy because they're more mature and information is more ubiquitous. It's like people have theoretically equal access to information, and there's regulations around that, so it's harder. I think closing off this one avenue would, it would do something, but I'm sure people would find another one.
Yeah,
this is the Wild West after all.
It is, and I think you made a very good point. It's until there's ecosystem protocols and regulations, when I say regulations, I mean best practices or whatever you want to call it, are put in place. It is going to be very, very volatile, because whenever there's talk of a hard fork or whatever, or updates, it makes the whole world unpredictable. So until maybe forking is reduced and becomes a thing of the past, I think then it will create a lot more volatility in crypto in the future. But until that happens, yeah, it's just going to make people go crazy and make them more political and bring out their tribal instincts. So it's going to be interesting until it kind of passes by.
In a switch of topic, we promised on Friday that we'd talk a little bit about the drama around Tezos. Remember that?
Yeah, that's right. Tezos, it's a very interesting story, and I guess there's two main things to it. One is obviously the inherent risks of ICOs, but also a lot of the laws and regulations are in place in different countries, and how various ICOs are trying to exploit them to their own good. And going back to what you're saying about loopholes, this could be the start of the closing of one particular loophole in Switzerland. So yeah, it's a very, very interesting story.
Yeah, well, a little bit of the background of it, in case you're just tuning in. About 3 months ago, there was a tech project called Tezos. They raised the record, $232 million in crypto during their token sale. They had the most successful token sale so far. And the way that token sales tend to be run is one of two ways. In order to comply with local regulations, in order to avoid paying taxes on all this money you raise, there are two areas where you'll see most token sales being done or happening. One is in Switzerland, so the Switzerland route, and the other is Singapore. And the reason is because the laws in these areas are really suited to a proper ICO or a proper token sale. I don't think anyone calls them ICOs anymore. I think to try and avoid being having the SEC in the US come down on your head. They call them token sales. But so Tezos went through Switzerland. And the way you do it through Switzerland is a non-profit organization is founded. And the non-profit organization collects all of the crypto tokens for on behalf of the company that's doing the project. So you have now the founders, Arthur and Kathleen Brightman of Tezos, who have founded this company and this project, and they're working on it. And then they had to found a Swiss foundation, and they put in a president or chairman, Johann Gevers, and he runs the foundation. He has all the money. They have the technology, and they are at odds with each other. And theoretically, the Swiss Foundation is supposed to be independent. That's the way it works. But because of this impasse, the founders of Tezos are now trying to oust the president of their NGO or their nonprofit. So the reason that you would do this in this complex way is because in Switzerland, the nonprofit rules are such that you don't necessarily have to do the same amount of anti-money laundering protection if you're dealing with cryptocurrency, especially if you're if you're a nonprofit. Don't need to pay taxes on it, and generally, it's a way of protecting the company from potential threats, from regulatory threats in this sort of new and wild environment. So I thought this was interesting because it now threatens the future of the project. But I also thought it would be an interesting case study, and just sort of looking at if you were going to do an ICO or if I was going to do a token sale, what would we do? What has to be looked out for?
Well, like, what's interesting about what the Brightmans wanted to do is that, and this is the reason for the impasse, was that this foundation in Switzerland that was receiving the tokens, with the tokens, it was supposed to buy out the Tezos company that has all of the code and all the software that's based in Delaware. So because that was the original plan, and obviously the president of the foundation doesn't want to go ahead with that particular plan, I guess down to various laws and regulations are in place. So that's why you have this battle, because I believe Arthur and Kathleen Brightman have realized they don't have as much control over the tokens that were raised as they initially thought they would. And so that's why you have this issue. So it kind of raises a lot of issues in terms of what's the best practice, as you were saying. Are you better off having an entity in Switzerland raise the tokens and then try and link the token entity with the actual company that's for profit? It's very, very complicated. And that's the thing about ICOs and why they're so risky, is that you're not directly buying equity in the company. You're kind of buying tokens in a company that's representing the company that's making the product. And so, and the thing is, you're kind of putting a lot of trust in this management to kind of bring it all together and somehow release a product. And the thing about Tezos is that there is no product. So once you actually get the tokens, the whole point is that the token money raised will help develop the product. And I believe 10% of all tokens being raised at the moment are actually being used in an existing product. So it's like, if you were to buy Ethereum today, well, you know, the Ether has been used in various projects around the world. But if you had bought Tezos, well, actually, that token right now, its only, function is to be traded on an exchange, and that's it. You know, people speculate on the value of Tezos, whereas the owners will have cashed out their Tezos tokens and use that cash to then build a product. And this is the big problem with ICOs. It's just that it's such the wild west. There's a lot of like smoke and mirrors, and the thing is, when you read about Arthur and Kathleen Brightman, they already have some good experience. Like I think Kathleen was working for R3 for a while. I think Arthur was working Morgan Stanley. So they did have, it's not like they're just two nobodies. They were working on this for a few years. So when you read about this couple, you read about their story, it's hard not to be impressed and think they're going to go far. But the thing is, there's so much legal work going on in the background to avoid taxes, to be legal, to stay away from the SEC, that you realize that getting the money is probably the easiest part for a lot of these companies. The hard part is trying to cash out and make something happen. And again, that's one of the big risks of these ICOs. How well do you know this company? And the thing is, they don't need to reveal that much to you. All they care about is just getting money off you to raise tokens, and that's it.
Well, it depends on the company. I mean, there are a lot of people who really do have this desire to create a great project, and this is an amazing way of funding it. I mean, Ripple, for example, is in the exact same situation. They're not live yet, and they've raised $90 million in order to create this product that'll simplify international banking. But a lot of it comes down to trust. It's sort of weird that the whole crypto revolution started with with this idea that we wouldn't need to trust any one organization, but with these token sales and especially for ones where we have a concept of a product and a white paper and a team, but we don't necessarily have a product ready. The token sale is going to launch the product. It comes down to trust by proxy. You trust this team because you've met the founders or because you've seen how their white paper looks and it sounds interesting, or there's a community around it. And that's as good as you can do right now. But I think that this is a danger on the right road. I think you do have to go through the Wild West before you get to civilization, and people do have to navigate an unregulated area with new technology before you get to proper regulation that doesn't quash innovation. And I don't think this is going to be the last fight that we see when there's so much at stake. I mean, we're looking at this. They raised $230 million. That amount now is worth $400 million because it was done in Bitcoin and Ethereum and the prices shot up. There's a lot of money at stake here. And I could imagine with all of the different crypto projects out there, some people getting greedy. And that's just what it is. And but I think as well, if any of our listeners, perhaps, if you are thinking of doing your own ICO, it's probably a little more complicated now than it would have been maybe 6 months ago. If you wanted to launch an ICO, you'd probably have to budget about $100,000 just in legal work, because you're thinking now, well, I have to set up a nonprofit in Singapore or in Switzerland. We have to make it so that there's an agreement so that they buy out the company, and so we get the money out via this buyout, and it has to be structured in such a way that it doesn't trigger tax events, that it doesn't apparently even in Switzerland you have banking law that you can run into if you're not careful. So if you're able to withdraw money, like if people who purchase your token can exchange it back, then you're considered a deposit, and you would be liable as under banking law. And so you have to state specifically that these funds aren't refundable. There's securities law. If people expect to get a profit from this. So collective investment, you got to be careful you don't run into all of these different laws. And so never approach something this complex without a lawyer. And the days of doing a useless token ICO just out of your back pocket are, I think, past us.
I totally agree with you. And there's not just the legal cost, there's also the marketing cost. Because I reckon that's crazy now, because you have to compete with so many. We're seeing more and more ICOs every week, and I imagine they're not raising that much. While September was a record month for ICOs, I wouldn't be surprised if the amount raised per ICO is diminishing because there's so much out there, because it's so competitive. That means your marketing has to be the best marketing out there to try and get as much dollars in to buy your tokens. So yeah, it's becoming more and more the Wild Wild West. And if you were to do an ICO, you really have to do your homework and be really, really prepared. And I was following the Unicorn Gold ICO, and they had, I think, did a pre-sale raise or something, like they raised like 15 million, but I wouldn't be surprised if that 15 million was used to cover legal costs and do the marketing for the ICO. So it's like you have to spend 10 million to get 100 million in an ICO is what's going on. And if you've no funds for an ICO, well then I would
Investors.
Suggest you get money because there's no point doing it with no money. Yeah. But I guess that kind of helps us move on to talk about our next show, which is about leverage.
Leverage.
So I had the pleasure of having an interview with Bharat Rao, the CEO of Leverage. Their ICO is starting in November, and I had a great chat with him. His product is like a derivatives platform for cryptocurrency trading. So very, very interesting. Bharat is a top guy. I think they're really, really going to do amazing things. Don't worry, I'm skeptical. I don't just talk about how amazing leverage is, but I really push Bharat hard on leverage and where he thinks things are going, and I think these guys are promising. So listen to my interview with Bharat. I think it's very, very interesting, and he's a lot to say.
I tell you something. Derivatives for crypto is a long time coming, and if it's not leverage, it's going to be someone else. There's a lot to be done here. A lot of people are slavering over over who will be the first to get to the derivatives market. So it's nice to talk to someone who's sort of in the middle of it. And I look forward to listening to it. I haven't actually listened to Neal's interview yet, so
good to know.
that'll be this week. The other thing to remind everybody. I tell you, if you want to connect with Neal and I, if you want to talk about the show, if you want to be part of this community that we're forming, if you want to get some of Neal and my proprietary cryptocurrency, the nutshells, the analysis in chains nutshells, join our Slack. We've got a Slack group that we've started. It's invite only. You have to go to www.analysisinchains.com, sign up in the form, and we'll send you a Slack invite. It's the way it has to be done. There's no seamless way of joining it. We have to send you an invitation link. But we would love to have you there. We've got some people who have joined already, and it's nice. Thank you, guys, for coming out, supporting us, giving us your feedback, helping us think through how to improve the show, and staying abreast of that. So do join us on Slack. That's all for now. We'll talk to you guys on Friday, and with leverage. Until then, have fun.
Keep on hashing.
That's our show. Thanks for tuning in to Analysis in Chains with Nathan and Neal. Check us out at analysisinchains.com, on iTunes, Podbean, and wherever else you listen to podcasts. Until next time, keep hashing.